corporate value up program in the market to reduce the Korea, I think partly to reduce the Korea discount. I guess just if you could explain to us, help the world understand what this program is about. What are its objectives, you think, and do you think do you think it will work?
사실은 코리아 디스카운트가 굉장히
Korea has a lot of industries that are quite globally leading, but the valuation of stocks in them is also low. So the government is very concerned about that. In Japan last year, they implemented a value program, and it was very effective. We saw a lot of money going into Japan, and we think the authorities are actually coming around to this now. We're trying to analyze why the Korea discount is so severe. I think that if the shareholder return policy is established well, we can repeat what Japan has done, and I think that Japan actually has a very good mix of policies. First of all, the shareholder return policy was implemented, and then the share buyback along with the share cancellation. Then the government increased the amount of taxation on personal investment among so-called NISA. The combination of these things has resulted in a lot of enrichment investment funds through share buybacks and the new pro-NISA policy. That became a plus, and it's attracted resources from other markets such as Southeast Asia. So I have hope that if those things are combined together, Korea could witness the kind of market Japan saw. It should.
Do you know when it's going to start? Do you have any information when the program begins?
아니요, 정부에서 아마
The government says they're going to announce the program probably in the middle of this February. So there's a lot of anticipation about what's going to be in there. I think some of the things that are being talked about in newspapers is to create a prime index, bundling blue chips, low PBR products, and then putting that into an ETF. I think that could be a huge catalyst.
Do you think your stock is undervalued? And if you think it's undervalued by how much?
It's true that we are very undervalued right now, because our PBR is around 0.41. It's hard to put a number on it, but I think the PBR should go up to a point where it's recognized by the market. It's hard to put a number on it, though.
I need to ask you now about your plans on boosting shareholder value. What plans do you have to give back money to investors?
Our strategy is to continue to increase our total return to shareholders a little bit from 2023 onwards. We did a share buyback every quarter, and if you look at our total shareholder return, including the share buyback, it was about 36%. So this year, we're going to continue our commitment to our shareholders that we made last year, that we're going to continue to buy back shares and cancel shares every quarter regardless of how the economy does. If we can do that, our goal for this year is, I don't know if we're going to achieve it this year or not, we're aiming to clear 40% first.
Why buybacks and not dividends?
In order to restore the share price resiliency, we need to reduce the share float. First of all, we need to continue the treasury stock cancellation so that we can take back some of the outstanding shares. Then we can boost the share price and the ROE will increase, increasing our shareholder value. Our first target is reducing the share float to below 500 million and to about 450 million shares. That's about 20% cancellation of stocks from the current level. It would take several years, but that's a plan. Regulators are taking a stance that they would not be involved in a big way with shareholder returns as long as there is sufficient capital. I don't think our plan would be hard, as the Value Up program is coming up. The mood is favorable.
When does the Bank of Korea start cutting interest rates? Do you think those cuts come this year? And if you think they're coming this year, when do you think they might start to reduce interest rates?
The market is calling for a fairly early rate cut, but we are actually predicting that it will probably be later than that this year. Still, I think we're going to be in an environment where we're going to see one rate cut in the second half of this year. But I don't think the Bank of Korea is going to take an overwhelmingly fast step. Rather, I think it will take the stance where it takes a slower tempo than the US and other countries. For example, if the US cuts interest rates, the BOK will probably take 1 or 2 steps longer.
From the bank's perspective, are there certain industries where you think repayment pressure becomes a problem this year, and do you think default rates start to come up across those sectors even more from current levels?
역시 한국에서 지금
The
고금리
biggest
상태에서
victim
가장
from high
큰
interest rates in Korea is real estate. When real estate prices were rising, a slight increase in interest rates could easily be covered. But now that it has stopped rising and has returned into a partial decline, and the gap is reversed as high interest rates are maintained, it can be seen that real estate developers and builders are in a very different situation, and the decline in their ability to pay interest is a burden on the Korean economy.
Is the worst ahead or is the worst behind us?
I think we're in a phase where we're looking for a landing spot. The liquidity issues and the bad debt issues of the SMEs have been largely covered by provisions over the last year and a half. A year and a half ago, we were actually quite concerned that this was going to turn into a systemic risk in the financial sector. But now we're seeing that this slowed down over the course of a year and a half, and we're not expecting any kind of bankruptcy crisis or default crisis in the SMEs.
Exposure to U.S. commercial property. Do you have any material exposure to U.S. real estate? Should we be worried?
Fortunately, in the banking sector, we actually had enough domestic funding needs that we didn't have that need to invest in overseas real estate. So we have very little exposure in commercial real estate in the U.S. right now. However, among our group affiliates, insurance and securities have some small positions. But even that is not a big number, so we think it is manageable. In Japan, there was no domestic demand for funds, so a lot of money flowed into U.S. commercial real estate. But in Korea, there was a relatively high domestic demand for funds, and there was not a lot of money flowing into U.S. commercial real estate. So I think that part is manageable.
Speaking of those specific positions and exposure you have, are you expecting any, whether that's a provision or to, a need to re-rate some of those assets, for example, in terms of the financial impact, potential financial impact?
Our overall exposure to U.S. real estate is about 2.4 trillion won, and I think the risky tranche amounts to about 1.4 trillion won. For the 1.45 trillion, we've built up about 20 billion won in provisions, and for the 1.4 trillion tranche, we've built up about 20 billion won in provisions. I'm thinking that's probably going to be managed within that.